All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group. A little bit later than today. We did a nice webinar for the timing research folks, so recording going on a little bit later than normal today. But let's just quickly go through a couple things that we saw after hours today and through today's session. Kind of give a nice summary for the day. But S&P kind of looks like we're moving up to that 200-day moving average, and we'll see. Right, we've been talking about this for a couple of weeks. Price continues to honor the staying above the 5-period moving average. Do I think that we might hit a little bit of trouble up here? Probably, so you could do things to kind of to manage this, right? You could maybe take off a couple of positions. You don't have to go crazy with buying puts. You don't have to go crazy with getting out of all your positions now that we're up to the 200-day moving average in the S&P. You just kind of manage it a little bit different, right? Maybe have a little bit less positions on than what you've been carrying the last couple of weeks. Maybe tone down your position size. That's what I'm doing, right? And that's what these videos are for, just to kind of tell you how I'm managing the markets a bit. Again, video, of course, is for information purposes only. But we are seeing certain groups. So I know, right? I mean, I don't own everything in the S&P, which I always make this argument, is that you got banks, utilities in the S&P, and that's why it hasn't gotten over the 200-day moving average yet. I mean, look at the FANG ETF, FDN. That's above, right? Kind of just slice through that 200-day moving average like no big problem. Software stocks, right? We know about these. No problem with 200-day moving average there. So I would not get super hung up on the S&P hitting the 200-day moving average. Sure, we could pause because everybody looks at it and everybody seems to do the same thing, but it really depends what you own. If you own everything in proportion to the S&P 500, then then you own the S&P 500, right? And then you have to be worried about that 200-day moving average. But if you don't own everything in proportion to the S&P 500, then there's some other trades that you can kind of look at with the software space. So, oh, and before I forget about it, you could watch our video that we did on. I think they're now advertising these as completely. So that's me, by the way. I put out a trade idea on Visa for Real Vision, and I think their trade idea videos are now free. It used to be subscriber, and I think their whole platform is subscriber based. But they told me that they're putting out some of their trade idea videos for free. So that was Visa. That was one name that we got involved in. Working out pretty well. Was able to take some profits in this trade today. I had two different lines on, so working pretty nice above the downtrend line. Today's movers, just to kind of talk a little bit about. I don't need to see the picture of myself again. Let's see. So movers after hours. This snap is pretty funny. I had a member say, "Hey, I want to go long snap." And I said, well, it's not something that I would probably go long, but we gave a nice we gave a nice call spread idea. Credit to Mr. MQ in my room, and he gave a nice call spread idea, the 7 to 8 call spread for 30 cents, net marking full profits. So really nice. Granted, again, I did not play this one, but real nice trade idea. What I was mostly concerned with today is how are these little software names? They're going to have to kind of put up good results. And look at what they did. Paycom, I believe, without bringing up their numbers, they beat, I believe, on the top line and the bottom line. Same thing for Zen. This is one that I did play for earnings. Zen is up to 73. This one I sold a put spread. So taking in money just like I did last week for ServiceNow. I really like to do that with names that have good earnings consistency. And I talked about that last week with ServiceNow. Same exact thing, right? Here's ServiceNow. So again, kind of adds for me a little bit of edge to earnings, which are a very unpredictable event. But when you have something like this, where every quarter they managed to do it, and if you look at Zen, which is another one that every quarter except for this one back here, they've beaten on earnings. It kind of adds a little bit deeper dimension to you for playing earnings names. Disney, for example, right? You look at Disney. and the options market makers were implying about a 2.4% move. And you could see what they do on earnings. They don't do anything. So, even it seems tempting. It's kind of like the bank earnings too. But look at look at Disney. Had great numbers, and I don't know if they said something bad on their conference call or what they did, but they're basically, what are they, unched? They're up 30 cents. So that's just what they do on earnings. So there is some history that you can kind of look at and say, do I really want to play this name for earnings? Do I really want to get behind it? No, probably not. A couple other names, EA really went down pretty hard. Kind of a head scratcher with EA. This is a name that has seen a lot of call activity in. And, I think there's some big investors in there, but, wow. And what's also puzzling about this is this name was up 4.6% today. Who was buying this thing? I don't know. Maybe it was short covering that brought this thing up 4.6%. Anyway, Take Two should be an interesting report. They should be down a little bit, but they report tomorrow morning. A couple other names. Data. I have to look into the quarter or data, whatever. However they're pronounced. Tableau Software. Well, it's like Data is not the name of the company. Tableau Software. They had good numbers too. They weren't much different than Zen or Paycom. So this was actually more interesting to me after hours today. Some of these names versus Google. No doubt about it. Google is interesting. Was interesting on earnings, but to see some of these names, still or has a loss per share, but they were expected an 8 cent loss per share. They did 3 cents. Their revenue was a little bit better than expectations. Maybe it was something in their guidance. So I'll have to read that in their teleconference. But again, all of these names, right? If you look at Zen, again, they had to prove it. I mean, I can't believe this name's up to $75 here, in the after hours. So they are continuing to crush. And Mr. Jim Cramer said this, and I really like the angle that he said. It wasn't the first time I've heard it, but probably most recently. These, in a year that's kind of struggling for companies, what are they going to do? They're going to hire one of these companies to look at analytics, to look at to improve their software, to basically improve productivity. So that's my theory why you see all these names doing so well is because companies, if they can't grow organically, right now in this environment, maybe they're going to be to get more efficient. And certainly, a lot of these companies, if you look at their software, they really make a lot of companies much more efficient. So they continue to be strong. I unwound a lot of my positions here. Because I just thought, hey, I've made money in just about every one of them. And I had about 5 of them on, which is kind of like the same trade, right? I had Adobe on, got out of Adobe. I had Autodesk on. I got out of Autodesk the other day. Coop was the all-star out of the group. I did not sit in this thing as long as that, but I was in Team. The only one that I'm still in, which kind of fell on its face a little bit at the end of the day, was NTNX. This one I think could still kind of pop a little bit, but certainly, instead of micromanaging these candles, maybe just watch the 5-period moving average. But that is one that I am still in. The other one that I got out of today was Zscaler, which also all profitable trades and all software. So I would kind of like again, I'm judging and I'm wishing for a little bit of digestion in this group because it is so hot right now. So we'll see. Maybe another name has to report and have bad results for this group to kind of cool off a little bit, but it is strong. This is again IGV. So what else? A couple other names. I think I mentioned Visa. Oh, I wanted to talk a little bit about Google. Google, I thought, was really impressive, right? I mean, we played how we played Google yesterday was to go along the XLC ETF. I like this. This is the communications ETF, right? I talked about there was a $660 million inflow back here. Man, did they get that right? Because this thing has been moving. This is buying. This is an inflow. And this thing is headed up to, I think, 47.5. So I took some profits in this today, but I'm going to try to get that. I'm in February options, so I hope it happens sooner than later. And yeah, so Google, which has a 23% weight in this, I like the price action in Google. So maybe, Google can actually get going. I know it's a tough name to kind of play, but 1150. yeah, or the 200-day moving average, and I like this VPOC sitting up here. What else got going today? There was a lot of momentum early on, which kind of stalled. But the Chinese Internet ETF continues to power ahead, even though China's closed. I think Hang Seng opens up in a day or two, but the Shanghai is closed for the whole week. The KWEB ETF was your best performer. And that outperformed the U.S. FANGs, the U.S. Internet stocks, which is again that FDN. Also, defense names have been strong, so there's some really good breadth that's going on here. Look at the ITA get back above the 200-day moving average. A lot of that is Boeing, but some. I mean, look at Boeing. Unbelievable move in Boeing. So I'll kind of stop here after 10 minutes. There's some other names that I want to focus on. I've got a couple. I've got a couple names that I'm really excited about. But again, you kind of have to, if you're getting into new names, it's not a bad idea to kind of take a couple names off that are just not working for you and to kind of rotate. That's what I'm doing. This name that I was in the other day, I took it off, Intersat, even though it came back nicely today. But you kind of have to be mindful of how many positions you have. I don't want to be getting right now. I don't think this is a place to get over the tips of your skis in regards to risk. So if I'm putting on, a new position, I like to make sure that I'm taking some positions off. So just like I kind of stripped down in software, I've got a couple other names that I'm really excited about that I'll go over tomorrow in the trading room. So thanks for joining me for tonight's video. Have a great night. See you tomorrow.